Hey Tanya, how are you? Oh. Hey Martine, how are you? Hey, come on in everybody. Good afternoon, good afternoon. Hey Pamela, how are you? Hey Jennifer. Okay, ladies, so I see a lot of you are coming in. If you can share the video, that'd be great. We're going to talk about the earned income tax credit. Hey, Riveters, Rick, how are you? We're going to talk about the earned income tax credit, so please share the video. I don't know why my Facebook is so dark. Let me see if that helped. Nope, Facebook is still dark. Tanya, thank you for sharing the video. We're going to start shortly. I'm going to give a few people some time to come in. And then we're going to rock it out, guys. We're going to talk about the truth that has never been told about the earned income tax credit. Martine, thank you for sharing the video. I really appreciate you. Facebook, you guys are running a little bit behind in sharing the video. If you can do that, that'll be great. And then I'm about to share the video, and then we're going to get started. So for all of my replay viewers, on Periscope, you won't be able to post any comments, but you can still share the video. So please share the video. On Facebook, all of my replay viewers, you can post comments. So post your comments. If you need me to answer it at a later time, post them there, guys. And please don't forget to share the video as well, because what you probably are concerned about regarding the earned income tax credit, somebody else may be just as concerned. And not only concerned, you really want to know the truth. You know, to be honest with you, there's just so much looming out there. Like, what is earned income tax credit? What is this all about? Why does politicians always want to slash the earned income tax credit? Like, really, what is the deal, right? What is the deal? So I'm trying to share the video on Facebook. Give me 1 second, and then we're going to get started. So for all of my newcomers, thank you for coming in, guys. I'm Folasade, the accountant to entrepreneurs. I help entrepreneurs dominate their businesses and control their money, guys, all through accounting. So I basically teach you how to, one, never pay more tax than what you're supposed to, and two, how to use your accounting as leverage. In today's live stream, hey Marissa, how are you? Today's live stream is specifically one of those ones to give you some inside information about your taxes and so forth. And we're going to basically talk about one of the most well-known tax credits out, which is the earned income tax credit. Marissa, thank you for sharing the video and inviting your followers. I really appreciate you. I probably should have came in a little earlier, but look. Hey Shalonda. Hey guys, come on in. Okay, so I'm about to get started. So I can't even share the video myself. So we're about to get really started, guys. Give me 1 second. Shalonda, thank you for sharing the video. I appreciate it. Okay. Alrighty. So we are about to get started. Periscope, thank you for the hearts. I appreciate you. I'm trying to block this person. Okay, I don't know. Camille, thank you for sharing the video. Okay. Alrighty, so the truth about earned income tax credit, guys. I'm excited to even have this discussion with you. Hey, Lakeisha, long time. How are you, love? Okay. So let's go ahead on and first talk about, give you guys some background history as to what this earned income tax credit stuff is like literally all about. So first of all, if you didn't know, the earned income tax credit is considered one of the most how would I say this? What's the word that what I have down here and what I really want to say? But let me just say how they say it. The politicians, they say it's one of the most innocent anti-poverty credit. So they call the earned income tax credit the anti-poverty credit. Hey, Miss Leslie, how are you? Oh, thank you, Pamela, for sharing the video. Lysandra, hey, love, good afternoon. So basically, politicians consider the earned income tax credit as the most efficient anti-poverty credit or benefit to low-income households. So that's the first thing. And it was enacted in 1975 by the Ford administration, okay, through the Tax Reduction Act. So through the Tax Reduction Act of 1975, the Ford administration implemented the earned income tax credit. And they did that because at that time things were food was rising, household costs was rising, and they wanted something for families to be able to offset any income losses. So if you basically had a 3-person household, you, a single mom, and your 2 children, the earned income tax credit was made specifically for you. But it was also made to encourage single mothers or individuals that are in low income areas, to really encourage them to get back into the workforce. So while people are complaining, because I hear this so often by our politicians, these people are lazy, this, and that, let me be really honest with you. That's why they created the earned income tax credit, to be able to offset any income losses within the household due to whatever circumstances. So you never know, the mom may be sick, can't really work, or she have too many children, and it's not worth putting them into child care, so she's only able to work part-time. If any of that sounds like you, then that's why Congress implemented the earned income tax credit. So don't be ashamed. Don't be like, oh, people talking about that, they call it the anti-poverty credit. Oh, I'm not supposed to benefit from it. It was created for you to benefit from it. If you don't benefit from it, what was the purpose of it being implemented? The problem and the reason why I perceive politicians want to snatch the earned income tax credit and the additional child tax credit and so forth is, one, it was only implemented initially as a temporary solution. Okay? So it wasn't supposed to go and get completely passed permanently. Okay? Is it only for single parent households? No. And see, that's a really, really good question, Miss Leslie. It is not only for single parent households. It is for any size household. It's all geared around what your income levels are. So if you exceed, let's say $53,000 or so and some change, you won't qualify for the earned income tax credit. And guys, for all of my newcomers, if you can share the video, that'll be great, because just as well as you may be concerned about what really the earned income tax credit is all about, somebody else may have the same question as you. So guys, let me be honest with you. It's in the amount is based on how many children, but let me just give you guys some background, some history first before I go into the thresholds and how many children. We're going to get to that. I think I have a little bit of time today. I just have to be out of here by 3 o'clock. But besides that, we can get into that. Okay. So first, it was created for households, for shortcomings, for when you have your downfall. And for all of my business owners out there, I qualified for earned income tax credit when I was building my business. I no longer qualify for it now, but when I first started my business, I wasn't bringing in a lot of money. I was bringing in $20,000, $30,000, $40,000 a year. And with my business expenses, so many of you may be just like me, with my business expenses, it reduced my taxable income down, right? So guess what? I ended up qualifying for earned income tax credit. So a lot of people say, oh, well, earned income tax credit is only for the lazy people. Or earned income tax credit is only for single moms. Or it's only for families. And that is not true. You can be a single individual, one person, and you qualify for earned income tax credit. Hey, Shakana. Hey, Monica. Hey, everybody. Come on in. Renisha said, but why hold refunds? I'm going to go into that in just about maybe 5 minutes or so. So, okay. So now they implemented this to help out families and so forth. So just know, earned income tax credit is not only for families and single moms and husbands, single dads, and all of that. Earned income tax credit can be for you if you're a small business owner. It can be for anyone, an elderly person, someone that don't have any children and don't have a business, or somebody that do have a business and don't have any children. So the earned income tax credit really requires you to, if you fall within a certain income threshold. It's not about your household size. The only thing that is geared around your household size when it comes down to the earned income tax credit, guys, is the amount of that credit. So there's 4 different tier amounts, okay? So it's 1 child, 2, 3, it's different tiers to what your earned income tax credit may be. So that's what determines what amount you will get for your earned income credit. The amount in your household, right? And then also your income. Hey, Tanika, how are you? Okay. So then now they implemented this to help it, but politicians are scrutinizing it, and they scrutinize it every time that there's a new administration, right? And let me tell you why. Do you guys want to know why? Put why in the chat, guys, if you really want to know why the earned income tax credit has been scrutinized every new term by every new administration. Put why in the chat. Facebook, please don't forget to share the video, guys. I really appreciate it. Okay, so look, the reason why the earned income tax has been highly scrutinized, and thank you guys for engaging as well. I really appreciate it, because I don't like to sit here and just talk to like the wall, because that's what it feels like sometimes. But the reason why the earned income tax credit has been highly scrutinized by politicians is the one reason, and you guys know what it is. It's all about the money. But the main reason is because the earned income tax credit actually eliminates certain individuals from being responsible in paying taxes. Okay? So I'm going to say that one more time. The earned income tax credit eliminates taxpayers' liability. So let me give you a scenario, guys, if you're unsure as to what I'm saying. Okay, so let's say, for example, you are a single person, right? And you make $30,000 worth a year. You're working, but you make minimum wage, $8 an hour. $8 an hour, and everything, but you're working, and you go and file your taxes, right? You go and file your taxes. So every time you work, they withdrew taxes, federal taxes, okay, and also state taxes and Social Security and Medicare taxes out of your check, right? So the earned income credit can eliminate your federal taxes and your state taxes, depending on if your state have its own earned income tax credit. But most states do, okay? But it's different from the federal level, okay? So if you've had taxes taken out throughout the year, right? Let's say if it was $1,000 you had taken out of your check a year, right? So what will happen is the earned income tax credit will kick in. Oh no, North Carolina /Sayers. earned income tax credit will then kick in, right? And then basically say, alrighty, you paid that $1,000 in taxes. Nope. You shouldn't have paid that $1,000 in taxes because you fall within the certain income threshold. Here's that $1,000 back. Boom. And here's also the difference in what that credit would have been if you didn't pay that $1,000 credit. That $1,000 tax throughout the year. So that's how the earned income tax credit basically works. It actually says, oh, you shouldn't have paid that amount. It eliminates the $1,000 that you did pay and gives it right back to you, right? Excuse me. And then based on the amount of the earned income tax credit that you qualify for, it will then be added on. Guys, if you're new coming in, go ahead on and say hi. And then if you can share the video, that'll be great. I forgot to mention that next week I will be releasing whoever won the contest to either have me prepare their taxes or a free 30-minute consultation. Consultation with me. So don't forget to do hashtag shared on February 28th. We are going to announce the winner. So don't forget, share the video, guys. Okay. So that's basically why the earned income tax credit is highly scrutinized, because it eliminates tax liability for certain individuals. And those individuals are the lower income households, right? Okay. Yeah. Can Donnie and I get earned income credit? He works. Yes. So it just depends. Every situation is different, and it also depends on what Donnie's income is. If Donnie's income is beyond $53,930, then you will not qualify for the earned income tax credit. But if his income is beneath the $53,930, then yes, you will qualify for earned income tax credit. Guys, go ahead and share the video. We're about to go right into next. What are the thresholds? What are the thresholds? And also, basically, I'm going to answer your question too, Tanya. So Tanya said, why not? How come married filing separate does not qualify for the earned income tax credit? You know what? That is like a really, really good question. So the main reason why the earned income tax credit you don't qualify for the earned income tax credit if you do married filing separate is simply because, guess what? If you haven't really noticed, right? The tax system doesn't really benefit divorcees. How would I say this? The government hate when families separate. So you lose not only your earned income tax credit, but you also lose your school credits. You also lose your student loan deduction, because they have this perception that if you guys are going to separate, you're going to have to be able to take care of everything separately in itself. So there's really no logical answer, but just the fact that if you notice how even the Trump administration is operating, if you are married filing separate, you do not reap the same benefits as individual households that are married filing joint. Okay, and then also it takes away from your whole household being taxed by the total income too. So that's another thing. When you do a married filing separate, it separates how the income is taxed, and it also puts you in the tax bracket in which you're supposed to be in, and not the tax bracket that your family will be in collectively. Okay, so now we're about to go right into the thresholds of the earned income tax credit for this upcoming year. Hey Yvette, how are you? Thank you, Miss Leslie. Guys, don't forget, share the video, share. I have a business and home question. Is that what you're saying, Logic to Logic? Go ahead and post your question if I can get to it. I definitely we'll get to it. And guys, don't forget to post your questions, but I will have a Q&A session as well, so you want to stick out. But guys, if you really want to know more stuff about taxes, if you really want to know how to deduct everything, I have a pop-up workshop that's happening on Monday, February 26th at 8 p.m., 10 ways to deduct everything, where I'll basically show you how to be able to deduct everything possible, everything that you're able to deduct. I'm going to give you the strategy, the tools for you to do so. And if you're interested, go to bit.ly, 10 ways to deduct. 10 ways to deduct. Okay? So, all right. So the next session we're going to go into is what are the actual thresholds and so forth. So let me be honest with you. If any of you have net investment income of $3,400, thank you, Tanya, $3,000, thank you, Lysandra, I really appreciate you. If you have $3,450 in net investment income, then you are not eligible at all for the earned income tax credit. Hey, Terry, how are you? Good afternoon, Terry. So if you have net investment income, so that can be stocks, if you're selling on crypto. Oh, and that's the thing. A lot of you are buying and selling this cryptocurrency. Just know if you would have normally qualified for earned income tax credit, then guess what? If you have net investment income from those sales, hey, No Cap, how are you? If you have net investment income from those sales, buying and trading of your crypto, that can disqualify you from being able to claim being able to qualify for the earned income tax credit. Terry, thank you for sharing the video. I appreciate you. Mar, how are you? Okay, so what are the thresholds for the earned income tax credit? So, alrighty, if you are a single individual or head of household, right, and you do not have any children at all, and your income, okay, is no more than $10,000, then you will qualify for earned income tax credit in the amount of $510. So I'm going to repeat that again. If you are a single individual or you are head of household, and well, let me take the head of household out because that will go when you have one child. If you are single with no children at all, right, and your income is no more than $15,010, then you will qualify for $510 in the earned income tax credit. Okay, so that just basically lets you guys know that even if you are single, you can qualify for the earned income tax credit. Even if you are building your business, you can qualify for the earned income tax credit. Even, so you can definitely qualify for the earned income tax credit. Oh, I have to respond. That was a client email, guys. I apologize. Okay, so the next threshold is if you are single but have one qualifying child, okay? You have one qualifying child and your income does not exceed $39,617, then you can qualify for $3,400 in earned income tax credit. So basically, what does all this mean to you? That means that you can now either get that $3,400 back or refunded to you, right? Or the $3,400 can reduce whatever taxes that you owed, or you will get the $3,400 plus the taxes that you paid back. Okay, so it just basically depends, but that's the reason why the earned income tax credit is very unique in itself. And exactly, Terry. And Terry said, and that's exactly why people want your kids' social security number so they can now qualify for the earned income tax credit. Hey, Elaine, how are you? Good afternoon, love. Okay. So now if you are single or head of household with 2 qualifying children, which a lot of my clients have 2 children, right? You can qualify for the mid-max, which is $5,616 in earned income tax credit. So now the question I have to ask you guys is this. Now you want to start holding on to your children. Do not give out your children so what happen. You will not qualify for the highest amount of that earned income tax credit. It is a major difference, Terry. It really is. You won't qualify for the maximum amount. So, let's say, for example, if you have 3 children, right? And you end up giving 1 child to somebody else, right? Then guess what? You done already reduced what you could have gotten back in your refund based on the earned income tax credit. What income do you have to have? So Elaine, I did just mention, if you are single and your income does not exceed $15,010, you can get $510 back in earned income tax credit. If you are single or head of household and you have 1 qualifying child, then you can get $39,607. And you don't make more than $39,617, you can get $3,400 back. Okay? And it gets higher and higher. But this is the thing. And this is why people with more than 3 children try to coerce you or ask you to claim their child. Let me tell you why. Do you want to know why? Press Y, guys. If you want to know why people with 3 or more children, right? If you want to know why people with 3 or more children try to get other people to claim their 4th or 5th or 6th or 7th or 8th child, type in the chat why. What you mean, Terry? No crypto. All right, guys. So we got a few whys over here on Periscope. Come on, Facebook. You guys are running a little bit behind. Okay. So the reason why individuals, both moms and dads, try to find other people to claim their 4th or 5th child, because there's a cap. Okay? So the cap is if you have 3 or more children, the maximum, okay, so I'm going to say this again, the maximum earned income tax credit that you can qualify for is $6,318. So what happens is if you have 4 children, you no longer get a higher earned income tax credit for that 4th children or for that 5th child or that 6th child. So what happens is with that 3rd child, you've already met the cap, the maximum amount that you can possibly qualify for earned income tax credit. So that's why moms that have a lot of children or dads that have a lot of children and their income can no longer suffice that child, then they go and try to get other people to claim them because they don't get the benefit anymore. Darcy, how are you? I got your appointment for tomorrow, I think. Yeah. All right, guys. So that's basically why when a person has 4, let's say 3 or more children, you notice that 4th child, they trying to find somebody else to claim them. Exactly. Yep. Thank you, Tanya. Maximum $6,318. Max. So, alrighty. So that's the cap for the earned income tax credit. I gave you guys the history about it and what it was initially for. Remember, it wasn't ever supposed to be a permanent law. It was supposed to be something that's temporary. But let me explain to you what I saw and what made me appreciate why I like the earned income tax credit and why, as a tax advocate for you guys, I'm always going to fight the states and be at all of the events that's discussing earned income tax credit. Do you really want to know the story behind it? If I can tell you the story, guys, press Y. Let me know if I can tell you the story why I appreciate the earned income tax credit. Press Y. What is it for married couples with children? How many children, Miss Leslie? Hi, yeah, actually just sent, yes. Is it today? No. Hold on, let me see. I'll check my email. I'll check my email. Okay, so you guys want to know why I really appreciate the earned income tax credit. One, I appreciate it because as you are going through the trenches and you're trying to work and you're really trying to build, it can really help a family offset the fact that they do not have substantial income to meet their household needs. So one of my clients qualified for earned income tax credit, and her income was like 14 something thousand or what, so right? And she qualified for the maximum earned income tax credit. And what I realized was, I didn't just look at the $14,000 that she made and bicker and say why she didn't work more and all of this stuff. You know what I mean? No, I looked at that, and then I looked at the $10,000 refund that she did receive. Okay, right? It actually allowed her to have a total household income of about $24,000. And as a mom, that additional $10,000, okay, can definitely go a very, very, very long way. So when I saw how impactful the earned income tax credit could be on individual households that only have the opportunity to make $8 an hour, or only have the opportunity to work part-time, it really bridges the gap between, you know, them having to pay for figuring out how to buy food and all of that stuff. So guys, I say all of this to conclude and to get ready to close out before I open up Q&A, is that when you guys get your tax refunds today, if you don't decide to come and have me do your taxes, but if you are, go to bit.ly/quick tax chat. Get on my calendar so I can help you. But if you know that you can only make $15,000 a year, you have 2 or 3 or more children, right? Try to save some of that money. Try to make it last. You know what I mean? Try to make it spread out from month to month if you possibly can. So what I would do if I were you, I will put that money. Oh, thank you. I will put that money in my bank account and only disperse the amount for every month that I need to help with my household. I would not jump out there, go and buy everything in the, you know, Gucci, Prada, Louis Vuitton, new car, TV, and all of that stuff, the stereotypical stuff that we think people buy. But I would go and put some of that money in my bank account and disperse that amount every month to myself. So, for example, where's my calculator? Let's say, for example, if your refund, hold on, guys, give me 1 second. So let's say, for example, if your refund right now, this particular tax year, give me 1 second. I'm pulling up the computer. I don't even know what my calculator is. This is bad. All my calculators, where are they? Okay, here we go. So let's say, for example, your tax refund was $10,000. Come on. I hate when computers run slow, to be honest with you. So let's say your tax refund was $10,000. Divide that by 12 months. Divide that by 12 months, okay? Divide that by 12 months, and then that will allow you to disperse to yourself $833 per month to yourself. So in addition to you working your job, in addition to everything, put that $10,000 in the savings, and then every month pull over $833 for your family. That's exactly what I would do if I qualify for earned income tax credit and I don't really want to work too much, and this is what I'm going to do for the rest of, for years to come, or this is what I'm going to do, So guys, you definitely want to make sure that if, just take advantage of the earned income tax credit, but just know this. If you take advantage of the earned income tax credit, meaning you claim somebody else's child and that person didn't live with you, or that person, let's just say you don't have a qualifying child. Or let's say your income really wasn't supposed to be what it is and you qualify for earned income tax credit. Do you know that the IRS can disallow you from qualifying for the earned income tax credit for years to come? So while you thinking it's okay, you're not doing any harm, everything's fine, right? Just know that when you may need to qualify for earned income tax credit, that the IRS can disallow you that option. So why put something at risk that you know you're definitely going to need for years and years and years to come? Hey Betty, how are you? All right, guys, so I'm basically done. If you want to know how to deduct everything on your taxes, guys, come and join my membership, Rookie on the Books, because this has already been created for them. We're going to do a pop-up workshop on Monday called 10 Ways to Deduct Everything. It's $37 investment, but they're going to learn how to deduct everything. Everything you could possibly think of that you ever thought on the back of your mind, can you deduct it? They're going to know. If you want to be in the know with them, go to bit.ly/10 ways to deduct. So guys, the platform is yours now. You can ask me any questions before I have to get out of here at 3 o'clock. So you got like 10 minutes to ask question. No, I got to look, Terry. I think I did. So we put them on the important post every month. We put 2 to 3 webinars that I want to do for the group every month, Terry. So guys, if you want to get my webinars on a monthly basis for a low investment, come and join my membership, Rookie on the Books, bit.ly/2 Rookie on the Books, guys. So, okay, so Ms. Leslie said married, 2 kids, earned income tax credit. Okay, so married with 2 children, okay, you can qualify for $5,616 in earned income tax credit. $5,616. That was a good question, Ms. Leslie. All right, guys, so you got about, 8 minutes now to ask me any questions at all about the earned income tax credit, about 10 ways to deduct everything pop-up workshop that's going down Monday at 8 o'clock. Post your questions. I'm here, but I'm not going to wait and beg you guys to ask me questions. Yeah, bit.ly/2 Rookie on the Books. All right, guys, so last, what they say, round, question number 1, last time. Look, I can run and go get some 8. Oh, yep, Tanya, go handle your business. Thank you for coming in, too. I really appreciate you. I don't know what's going on with my mouse. All right. Okay, guys, so it look like we don't have any questions. Yes, look, listen, that's what I was about to say. Yes, girl, you are like a little rapper over there sometimes. Yeah, so that's what you guys are making me do, last call for tax questions. Okay, guys, so I'm excited. Let me go ahead and get back to work. Got to go pick up Brennan a little bit. But, guys, if you want to join us on Monday, definitely come in my pop-up workshop. It's actually was only created for my membership. Terry, check your email. Type in monthly 101s. Monthly 1, /1. It should come up your link for your 101s. And we send them out every month on the 1st, so definitely you want to check that out as well. Okay, all right, guys, so it looks like we don't have any questions. If you guys want to come and join us on Monday in the 10 ways to deduct everything pop-up workshop, guys, bit.ly/10 ways to deduct everything. And just to let you guys know, we're also having another workshop for them on Wednesday called Bookkeeping Over Everything. So in that workshop, I'm going to walk them through, managing their books every month, what they should be doing every month, and basically answering any questions that they may have about, maneuvering and accessing reports and what they should look for. So if you know you need access to workshops like that, come and join my membership, bit.ly/2 rookie on the books, guys. Terry, I didn't open up the bookkeeping one yet for the public, but 10 ways to deduct everything is public, but you guys get access to it, part of the membership. All right? Bye, guys. See you a little bit later. Don't forget, replay viewers, share the video. And if you have any questions, post there in the chat. But don't forget, I am going to do my announcement next week. If you have been sharing my video, you have the opportunity to sit down with me for a free consultation. So don't forget to share the video, #shared. My assistant is going to come on and pick the winner. Question: is there a minimum income to receive? Whoa. So there's a minimum income to even file. Okay. So within that, but the maximum, if you are single, if you want to qualify for earned income tax credit, if you are single, right, with no children at all, you cannot make more than $15,510. But you may want to catch the replay, guys, as well. And just to let you, if you wanted to know more information like this, guys, you have to come and check out my tax resource center, which was created for my clients only. So we have the earned income tax credit, workbook inside of the resource center, guys. So, all right, guys, I'm excited. Have an amazing day. It's 70 degrees over here in Maryland, but I have to get back to work, guys. Love you. Bye-bye. Bye, Tommy.